This system allows you to create either an amplifier, like a force multiplier, because it's going to increase your return, right? If you have a 10% return and this gives you 2% arbitrage, it's going to increase your return by 2%, right? So that's a 20% improvement on whatever you were going to do. And if you happen to invest in something that was that you lost 5% in, let's say you picked a bad investment, well, this 2% is a hedge now, right? So what it would do is it would reduce your losses by 40%, right? So it's a way to allow you to operate more efficiently. Hey, what's going on, cash flow hackers? It's Chris with Life 180. And for this video, I want to talk to you about what infinite banking really is. Now, this is a fun topic because let's face it, there's a lot of people out there online that talk about infinite banking simply as a life insurance policy, right? Like if we really break it down and we look at infinite banking, most people kind of look at the concept or think about the concept and they say, well, infinite banking is a properly designed whole life insurance policy, and you utilize that policy. It's a high cash value policy. It will be a banking alternative. All these different things. A lot of people talk about it in a lot of different ways. But here's the bottom line: when we look at infinite banking, it is not just a whole life insurance policy. One of the important things I think to really understand as you really dive into infinite banking, if you're thinking about implementing it in your own life, if you are thinking about utilizing infinite banking as part of your life insurance practice and selling it, one of the things that I think is really important to understand is that infinite banking, and I'm not going to use the terms necessarily that they use internally with the infinite banking, like practitioner program and all that stuff, but I'm going to talk about it in the terms of like how I try to talk to people conversationally about it and really understand that infinite banking is really just a financial system, right? One of the things that I think is really important to understand is, yes, the insurance component behind it is important. It's kind of it's a key factor in the strategy. You can't do it without it, quite frankly, because there's that. But that's only because there's no other financial product on the face of the earth that will do what whole life insurance will do for you. Okay, so that's first and foremost. Now, secondly, when you look at the overall system of what infinite banking is, well, that system is just a set of rules and behaviors around how you view your money, how you think about your money, how you utilize your money, how you leverage your money. You know, when we talk about banking, what we're talking about in the infinite banking thing is thinking about the fact that every single person in this world utilizes a bank in their life in one way, shape, or form at some point in time. And most of us do it on a daily or weekly basis, right? We leverage banks, we save our money in banks, we then allow the bank to take that money, leverage it out. They're earning interest on our money. So think about it this way. When we put money in a bank account, what we're doing is we're putting a deposit in the bank account, and that bank is going to turn around and give us a return on our savings account, right? And so let's say they're giving us 0.1%, which is roughly what it is right now. Because we live in a financial system where we implement what we call fractional reserve banking, the bank is then able to leverage that money and turn around and leverage it out, right? This is one of the reasons I love infinite banking as a system. The product is just part of the overall system, right? So they take your money on deposit and they leverage it out. So you're gonna earn a certain percentage, but they're going to be earning a spread, right? So for the bank, they have built-in arbitrage, right? Meaning positive spread that they are earning on every dollar you put into their bank. You give it to them for 0.1%, they're going to lend it out for 4% or 3% or 5% or whatever that percentage is based on the risk that they have with whatever said loan is, right? That's first and foremost. Secondly, they're able to leverage it in the sense that they have a ratio. They can basically anywhere between 10 and 100 times that money. If you put $100 in a bank account, they're able to leverage that money, and they're able to say, okay, Chris gave us $100 in this bank account. We're able to loan $1,000 because of the fact that we have this $100 on deposit. Right? So that's the second thing. They're able to leverage that out. So when you think about what a bank is doing there, if you know they're going to be able to earn, let's say 4% on a loan, they're paying you out 0.1%. That's a 3.9% spread, but then they're able to 10x that money as far as the leverage that they're able to loan it out. So they're able to effectively earn 39% on the money that you're giving them, right? With virtually no risk to them, right? That is how banks make money. And you look around, you go to any big city, you go to any big town, most likely one of the biggest buildings outside of government buildings, of course, are the biggest buildings that you're going to find are going to be banking institutions, right? And that's not by accident. It's because these guys understand how to leverage money in their life. And when it comes to you, most people, I think, struggle with their finances because they don't have a long-term view. When you look at life insurance companies, when you look at banks, those are two of the oldest financial institutions that we have in this country. And when you think about those two things, they have the biggest buildings because they have time on their side and they've leveraged systems that have their money working for them, and they're not the ones taking the risk. Think about it that way. They're not. I mean, life insurance companies are the best. Banks are sometimes exposed because they get a little too greedy, and some of the regulatory bodies allow them to take on more risks than they should, and then human greed takes over, and that can cause banks to fail. But if a bank is operating conservatively, there's no reason a bank should ever fail, right? That's why I love utilizing life insurance companies as a banking alternative. So the other thing that I think is really, really cool to understand, and I have this book here. So this book, I just got to put this here, Pirates of Manhattan by Barry Dyke. If you haven't read this book, go get this book. I love this guy. I actually did a video series interview. I'll put it in the link section above. I'll tag it right here. I'll actually put it on the end screen as well, so you can go check it out. If you watch this video all the way through, you can watch my interviews with this guy. This guy, he wrote a couple books. He wrote Pirates of Manhattan, Road to Serfdom. You can see how thick they are. These are basically like, he literally, in my opinion, changed the industry with these books. But one of the things I want to show here, and I'm not going to go into detail, but I want to show kind of that. And what that is this is a ledger showing how much whole life insurance, cash value, high cash value life insurance these banks have on deposit. And what happens is life insurance is considered a tier 1 financial asset for these banks, right? And I'm getting into this because I think it's important for you to understand, if banks are using this system, so too should you, right? Like, that's a big thing to understand. A lot of people who sit here and say that life insurance is a horrible investment. Well, it is a horrible investment. It's a great storage vehicle for your wealth. And it's a secure place to keep your money. It's a tier 1 asset on the books of banks. So if they're utilizing this system and they're trying to leverage and create leverage, why wouldn't you do the same thing? So I'm going to look, just look through this. I could see Merrill Lynch, Credit Suisse, Goldman Sachs, JP Morgan, Merrill Lynch again, Morgan Stanley, Alliance Capital, UBS, Wachovia, American Express, Raymond James, like all these companies, Bank of America, Wells Fargo, Putnam Investments, like all these companies are doing this stuff, right? They're utilizing whole life insurance as a key foundational component of their businesses. So I find it ironic that a lot of those institutions will turn around out of the other side of their mouth and tell you that it's a horrible, horrible place for you to store your money. And the thing that blows my mind with that is, like, if it's a horrible place for you to do it, why would they do it? And, here's the bottom line. It all comes down to leverage, and it all comes down to a system. So when we talk about, infinite banking, not just as a whole life product, but as an overall system, really what it comes down to is, I'm a big believer that people are struggling in this world because their financial system is messed up. It's set up for them to fail because you're plugging into the traditional methodologies of financial planning that the government has kind of put into place for you, that financial professionals have put into place for you. But the reality is, those systems are more designed to separate you from your wealth and separate you from success than it is to get you to where you want to go. It's hypocrisy at its finest. All these organizations that I just showed you in this book will tell you don't do it, but they're doing it themselves. If you look around, look at, in this book also, he talks about the fact Ben Bernanke, had all of his money. He had no money. In 2008, when the market crashed, he had none of his money in the market. He had it all in life insurance products. All of it. Ben Bernanke, chairman of the Fed, who's trying to convince you that the market is not, risky and that investment banks know what they're doing. That is, Once again, hypocrisy at its finest, right? So when we look at things like that, one of the mentors I use is I've worked with a lot. His name is Brendan Burchard, and he always says common sense is seldom common practice, right? And so we have to look at this from a common sense perspective and then implement common practice, which is saying, I'm going to do what they're going to do. Like, I'm going to not think about this emotionally. I'm going to think about this logically, and I'm going to implement a system. And we have to look, if we want to implement a system that we know is going to get us where we want to go on a predictable basis, we have to understand the environment in which we're operating inside of that system. It's one of the things about infinite banking that's really key is they're really big on Austrian economics. This fractional reserve banking Keynesian economic system that we're living in right now, it creates a lot of volatility. And if you follow that system, you're going to find yourself a lot of times coming up short and finding yourself in pretty tough financial straits because of mistakes and because of things that are outside of your control. The thing I love about infinite banking and Austrian economics, it allows you to operate systematically and start with saving. That is the key thing here. You got to have a long-term view. You got to start with the end in mind, figure out where you want to go. Then you can implement a savings plan, and then you save, but you save with the intent of investing. And then what happens is, once again, the whole life policy is not your investment. That is your savings vehicle. It is the foundation of your financial life. I'm going to call it your tier one asset, like banks use in there for their financial stability. It's your tier one asset. And as you save, what happens is it allows you to create leverage because you can bake in positive arbitrage to every dollar you ever have run through your financial life, right? And the cool part is it keeps you out of trouble because I think too many people are too stretched thin when it comes to their money. Their cash flow that comes in, i.e. their income, right? Typically, for most American families, at least American and Canadian families, we have income that comes in, but we have to think about our lives as a business, right? So as money's coming in, that we got to consider that revenue. If we're thinking about our life as a business, our income, we just got to view as revenue for the business. And then we got to figure out what are we going to do with that? We have to save first. We got to pay ourselves first, right? That's how we're going to create security. And when we put that money into a savings vehicle, that money is going to build security for us. It's going to build stability. It's going to create opportunity. It's going to be an emergency fund. It's going to be all these things. And when we can think about as we build this up, we're able to consistently increase our standard of living and consistently increase what our capacity is to go out and invest, what our capacity is to go out and create, right? And when we think about it that way, the bigger it gets, we can create a positive arbitrage number. If I'm paying 3% for money, obviously, depending on when you're watching this, 20 years ago, the percentages were different than they're going to be 20 years from now. And right now, if I could pay 3% for access to money and earn 5% on it, well, now all of a sudden I have 2% positive arbitrage baked into every dollar that's flowing through my life. And that's what this system is about, is having a long-term view, being disciplined to not chase returns and not invest until you're ready. And when you do invest in things that you understand and that you have a direct control of, at least some capacity, controlling the result of said investment. But when you do it, this system allows you to create either an amplifier, like a force multiplier, because it's going to increase your return, right? If you have a 10% return and this gives you 2% arbitrage, it's going to increase your return by 2%, right? So that's a 20% improvement on whatever you were going to do. And if you happen to invest in something that was that you lost 5% in, let's say you picked a bad investment, well, this 2% is a hedge now, right? So what it would do is it would reduce your losses by 40%, right? So it's a way to allow you to operate more efficiently, right? So what I'm saying here, the beautiful part about this is if I could show you a system that helps you operate more efficiently in your financial life, that gave you a set of rules that helped you make your decisions, helped you put every decision that you had to make with your finances through a filter that popped out and you wouldn't have to question whether you could or couldn't do it, how interested in that would you be? And if I could show you a system that as you did it, allowed you to gain that 2% on every dollar that went through your life, you would realize that rather than taking a very small percentage of your money. Most people, if they're lucky, are saving 10% of their income. So instead of trying to take 10% of your income and earning a really high rate of return and taking a lot of risk to do that, you could go out and you could say, listen, I'm not going to go try to chase that big return with a small amount of money. I'm going to take a bigger amount of money. I'm going to be much more conservative with that money. I'm going to put it in a savings vehicle. I'm going to run it through a system. I'm going to run all my personal financial life through that system. And I'm going to earn a small percentage of arbitrage on every single thing that runs through my life. Now, all of a sudden, I don't have to worry about trying to take all this big risk to get there on a small amount of money, because when I'm making a small return effectively on a bigger chunk of money, it's going to get me where I want to go more predictably. Now, I'm not sitting here telling you don't have to take risk, whether you invest in crypto or real estate or your business or anything. I'm all about that. But I'm a big believer, nobody should invest in anything they don't understand. And I promise you, you don't understand what's going on in your 401k. You don't understand how your IRAs work. You don't understand the inner workings of mutual funds. And like most people, and I shouldn't say you, I mean, I'm talking, when I say you, I'm talking generically, like most people in this country that are actually investing in these assets have no clue what they're actually doing. And so what I'm going to tell you is, if that's you, well, guess what? I believe we're coming towards the end of a bull market, right? Like, we are in for a massive correction, and this bubble has grown pretty big. And right now, it's more important than ever to secure your assets and to protect your wealth and to get it into a system, something similar to what I'm talking about. Make sure you have your money protected, because when the time comes where the market is going to reverse on us and maybe the bubble pops, and what's going to happen is it's Warren Buffett says there's going to be blood in the streets, and there's going to be people making a lot of really bad decisions with their money, because let's face it, they've made they're financially set up improperly, and they're exposed to a lot of risk, and they're going to have to compound their bad decisions and their bad financial structure with more bad financial decisions, which is going to open up a lot of opportunity for the people who are prepared for it. And that's what I want to set you up with. Now, if you have any questions about that, I know this is a lot, but the bottom line is, infinite banking is just a system. It's a system to help you run your money through. It's a system that can help you make your decisions more effectively, and can give you a set of rules in how you handle your money. And it's pure leverage. That's what it is. It's Austrian economics at its finest, in my opinion. And that's why I love it so much. And it's a savings account on steroids when you look at just the product of it. But I'm going to tell you, if you're looking at it just as the product of whole life insurance, you're not really understanding fully what infinite banking is. So if you have any questions at all, I encourage you to go down below, click on the link. You can talk to one of our endorsed agents to have a conversation with you. Maybe they can help you. They can look over what you have going on. We can see if infinite banking makes sense to implement in your life. I mean, no pressure, no harm, no foul either way. We're just here to serve. Also, down below, check it out. Got a link to our new book, Cash Flow Hacking. We talk about this all the time. Life insurance is not an investment, but it is a leverageable vehicle. I'm a big believer that people should be utilizing these policies to create leverage and create investing for cash flow, right? You should be leveraging these to invest for cash flow inside of them. And that's what cash flow hacking is all about. So have any questions, comment in the comment section below. If you haven't already, please hit the subscribe button, click the bell, that way you get notified every single time I launch a new video. And as always, until next video, have a blessed, inspirational day, and we'll talk soon. See ya.